Hello, everyone. Welcome back to another Lunch and Learn webinar. I am your host today, Mayur Thaker. I am one of the relationship managers here at Zacks, and always available to help out anytime you need any assistance navigating the platform, as well as putting together strategies or to just generally discuss what all tools and data are available through the Zacks system that you all have access to. So today we're going to be talking about the tools that pertain to earnings season, since we're now right in the middle of earnings season for Q1, and all eyes are on what companies are reporting, as well as what management is saying regarding what their expectations are for the full year, given the absolute chaos that we've been in these last several months now. So earnings are especially important right now, especially their guidance and their commentary coming in from corporate management. So we're just going to review some of the tools that you can use in Advisor Tools to be able to stay on top of all of the companies in your portfolio and to continuously monitor, what the expectations are, as well as what the results are. And so as I go through this, if you do have any questions that come to mind, please feel free to type that in on your GoToMeeting panel. There's a section where you can enter in a question. So I'd be more than happy to take questions at the very end of this presentation. So let's get started. So we'll just jump right into the Advisor Tools website. So I have here on my homepage, I have a couple of different watch lists. So, if you have, built up your watch list in your Advisor Tools, then, you're going to see your portfolios, first right as you log in. I just have two of my own portfolios here. I have a growth portfolio as well as a quality deep value portfolio, I like to call it. So just two different portfolios here. And one of the first items that I like to use when it comes to earnings season is if you go under this news and events section, the events calendar is a great place to just stay organized and stay on top of, making sure that you know when companies in your portfolio are expected to report earnings. And here I have my growth portfolio loaded up. So these are the 4 or 5 companies that are reporting in the month of May within my growth portfolio. So you can just quickly see that here. You can click onto one of them just to see what the expectation is. And here for Shopify, the consensus estimate for the quarter is a 70-cent loss. You can just quickly know very, very easily what that expectation is heading into the earnings announcement. And it's as simple as just clicking this little drop-down menu and toggling between these different portfolios. So now if I want to switch over to my quality deep value portfolio, these are all the companies that are reporting then. And as you can see, AbbVie is one of the companies in my watch list, and they just reported earnings today. So you can see that here. So this is very easy to use. Again, by the way, if you do use Outlook for your email, then you can actually download all of the earnings, expectations in terms of, when they're reporting into your Outlook calendar. So you get a notification saying that, hey, tomorrow or, next week, these 2 companies in your portfolio are reporting earnings. And to do that, all you have to do is go to this list view. If you click that here, and if I click on go, it'll take us to this list view. And now there's a button right here that says create iCalendar file. So if I click that, it's going to generate an iCalendar file, and you can then simply plug that into your Outlook just by going to File and Open Calendar. So all you have to do is click on File in your Outlook, Open Calendar, and then you load up that file that was just saved by clicking this button right here. So that way, all of these companies and the dates will then show up on your Outlook calendar. So just another quick and easy way to stay, to stay organized and to make sure you're always on top of when, companies in your portfolio are, reporting earnings. Then when it comes to monitoring the actual announcements, we have this view right here called Surprise Activity. And this is one of my favorite views in the entire Advisor Tools because this will show you all companies that reported their earnings today. Or you can go back in time as well, so you can see who reported yesterday or the day before that. But as far as this goes right now, I'm just looking at May 1st, so that's today. These are all the companies that reported their earnings and what their, just a couple of basic information like what their market cap is, what quarter did they report for. And you can see here most of them are on a standard, calendar quarter, so that's, the March 2020 quarter. And you can see how many estimates are going into it. Sometimes, very small companies may not have a whole lot of coverage, or if it's an ADR, like in this case, it may not have a lot of coverage in it. So you can just quickly see, the breadth of coverage. So you can see over here, TEX had 8 analysts cover, that company. And then you can just monitor exactly what the estimate is, what the actual number, reported was, and then the standard deviation of estimates. So you can see how much analysts were in agreement or in disagreement with one another. And so then you can see the surprise percentage. So this is the percentage that they either beat or missed the expectation. So here they missed by 18%, whereas this company right here beat by 20%. Okay, so you can just quickly see how big the beat or miss is. Down here, I can just look at Huntsman. They actually really beat their estimate, by 52%. But another factor just to look at is this SUE factor. And I just want to quickly highlight that. What that does is that it tells you the number of standard deviations by which they beat. So, in the case of Huntsman, the estimate was 19 cents. The actual was 29 cents. So that's a 52% beat. However, if you look at the standard deviation of estimates, it was only 2 cents. So that tells you that the beat of, that result of 29 cents was a 5 standard deviation beat. So anything more than, say, 1 or 2, especially anything more than 2 or minus 2, is a particularly strong number. So this helps put into context exactly how big that surprise was. So I would say anything more than 2, plus or minus 2, is a very, very sizable beat or miss. So this is just another thing to keep in mind as you look at this. And we're looking at earnings right now, but you can switch over to sales and see exactly the same table, but for revenues. What was the estimated revenue, what was the actual revenue, and what were the percent surprise, as well as that SUE factor. And then this consolidated view kind of combines both, so you can see both earnings and sales. I should also mention that if I go back to either earnings or sales, you can see over here on the right, we also present to you the guidance as well. So if management did issue guidance, you'll see that number here. And you can see, for example, this company, Goosehead Insurance, they, the estimate for 2020 was $96 million in this case. We're looking at revenues. And they came out and issued guidance of somewhere between 100 million to 105 million. So that's a very good result there. So they actually beat on the guidance there. So they increased their overall full year guidance versus what the analyst community was expecting. So that's very, very good to see. But if that were to happen for any other company, we will have it listed here. But as you all are pretty aware, a lot of companies are pulling their guidance right now. They're pulling it from when they issued it earlier in the year, simply because of the uncertainty that has come from the COVID-19 shutdown. So when something good comes up, which is pretty rare, you will see that listed here, as well as when something negative comes up. So that guidance is very, very important to keep track of. And then also we present to you the non-financial metrics too. So a lot of times companies will, the stock price will move, but it may not move just based on the earnings or revenues, but it may move more based on specific numbers that these companies report. So these are the numbers that each of these companies have reported. So that's sort of their KPIs, if you will, their key performance indicators. And so for in the case of banks, you can see what their net interest income was, what the estimate was, and what their actual number reported was. So you can see that that was a miss here. but this particular line item, gain on sales of loans, that was a really nice beat for them, a 36% beat. So you can actually drill down and see exactly where they've been missing or beating, specifically on their segments that they report. You can see here that restaurant brands, here are their, particular segments, and restaurant brands, a lot of us may know more based on, the companies that they own, like Tim Hortons, Burger King, Popeyes. So you can see them reporting their specific segment revenues down here, in the breakdown here, and you can see whether that was a beat or miss. And for the most part, they actually came very, very close to almost in line with what the expectations were. However, on a SUE factor, they came in a lot lower. You can see that there. They missed on Burger King by, 1.78 standard deviation. So that's not good to see, of course. You can also click onto this and see what the historical numbers have been. So if I click on this Burger King restaurants here, it's going to pull up, how they've done historically on that number. You can see that that was a miss right here. The last time that they reported, it was actually a beat. However, it was right before the the COVID-related shutdown, so that didn't do much, as far as the company stock price. You can see here that they missed prior to that, and that's what led to this subsequent weakness. So you can see here very quickly that what they report for Burger King has an effect on the company stock price over the next couple months. Okay, so that's very, very important. And let's switch over to a company that we all know, like for example, Apple. If I were to switch over to Apple, you can see here exactly, what Apple's, for example, iPhone sales have been, and whether they've come in at a beat or miss. So over here, we're looking at, Apple's iPhone sales estimates versus actuals. You can see here, exactly when they beat or when they missed and what the impact of on the stock price was. So you can see that very quickly and easily here. So again, it's a very, very helpful tool just to, make sure that especially if you meet with clients, you can sit in front of them and discuss that, with them, their specific segments that they are, that the company, is really, really dependent on. And you can discuss with them, how well they've been performing with regards to beating or missing expectations. Okay. So that's the surprise activity view in a nutshell. Also, what you can do is, and I like to look at this as well, which is the news section. This is going to be a lot more breaking news. So we have a really, really good, I would say, news feed. So that way you can keep track of all of the news that's coming out from various different providers with regards to the tickers in your portfolio. So I have my growth portfolio loaded up here. And so you can see that these are all, news that, pertains to, the stocks that are in my growth portfolio. And I can switch over to my, quality deep value portfolio, and the same thing will happen there. So that this is all news with regards to those stocks in there. So again, these are really good news providers. You can see the full list of where all these news are coming from. So again, if something is happening and if a client calls you and is asking for, what might be going on with one of the companies in their portfolio, this would be one place I would come to check out, immediately, just because it will be talking about something that might be, affecting the stock price today, like right now, as opposed to something more big picture like what we just saw before. Okay. So that rounds out, some of the tools that we have here. The other thing that I would love to point out as well is the table builder. And the table builder is one of my favorites, again, because this will help you stay organized in sort of a list format when companies in your portfolio are reporting earnings. So this is a little bit different from the events calendar, whereas the events calendar will kind of show you in a calendar format, right, when companies in your portfolio are reporting earnings. The table builder will show you more in a table format. So it's really the same data, except it's a little bit, it's personal preference. Which one would you like to see? Would you prefer it in a calendar form, or do you prefer it in a table form? I really like this table format, and you can just sort it by this this column right here, so you can see when the companies that are most immediate with regards to earnings, when are they reporting? So in my particular quality deep value portfolio, these are the companies that are reporting next. So we saw AbbVie just reported today. Allison is reporting next week, and so on and so forth. So you can just quickly see that here. I also have the Zacks rank here as well. So the Zacks rank is a great tool to set the expectations, because we've seen in our studies that companies that have a very strong Zacks rank heading into the earnings announcement have a much better likelihood of beating the estimate than companies that are rated a 4 or a 5. So in this case, I have here, for example, Ensign Group. They're reporting next week, and they're currently rating a number 1 Zacks rank. And typically, based on our studies in the aggregate, companies that have a number 1 rating tend to do really well on earnings, whereas companies that are rated number 4 or a 5, have a stronger likelihood of missing their earnings. So this is a great table just to stay on top of not only when are companies reporting within your portfolio, but what is the analyst sentiment right now? Are they revising estimates down heading into earnings, or are they revising up heading into earnings? And one might think it's counterintuitive, because you might want to have a company that has a low expectation heading into earnings. And while that might seem intuitive, the reason why Zacks ranked number 1 stocks do so well with regards to earnings is because a part of this model is to place a greater weight on more recent data. So for example, if a bunch of analysts say, okay, for Ensign, we believe that they're going to report, let's just say, $2 a share, right? And let's say the average age of those estimates is 15 days. And now let's say an analyst comes out today and says, hold up, we think that they're going to do $2.20. So the idea is the newer estimate that just came out today has more information, or more recent information, than estimates that were put out 10 or 15 days ago. So the Zacks rank picks up on that and places a greater weight on the most recent estimates over older estimates. So if the newer estimate is higher than the older estimates, then that plays favorably into the Zacks rank, and that gives you somewhat of an edge heading into the earnings announcement, because that newer estimate might be reflecting new information that the other analysts have not yet picked up on. So that's one of the reasons why Zacks rank does really well with regards to predicting, how well they're gonna do heading into the earnings announcement. So again, just another really good tool to have, at your disposal right here. And again, as a refresher, you, in order to build out this table, this is again under Tools, Equity Table Builder. And over here under the options, if you go to Add Metric, you will then be able to select from all of the various different items that we have, both fundamental and growth items, as well as under ratings, you'll see the analyst recommendations, you'll see the average broker rating, and so on and so forth there. So again, very, very helpful to have this at your disposal. And you can continue to add a number of other factors to this report. So for example, I would like to see in addition to this report, maybe you want to see what the sentiment has been as far as the stock price return. So if I click on Add Metric, and if I go to Price and Price Changes, I just want to know, how has the stock been performing heading into the earnings announcement. So if I add that metric, see that there, I'm just going to drag this over, and I'd like to see it right next to the Zacks rank. So you can see here that, look, Ensign has a very strong Zacks rank, and yet over the past 1 week, it really has not moved much at all. So that can tell me, potentially that this could be setting up for a decent post-earnings stock price move, just based on this alone. Because the stock is not, exceptionally strong heading into that earnings announcement, because it's barely changed over the past 1 week. Maybe you want to add a longer time frame, maybe a 4-week price return. So it's totally up to you, but again, it's a great way to just stay on top of, how stocks have been performing heading into the earnings, announcement. And you can see here that I added the 4-week, and even over 4 weeks, the stock has not really done much. So, this could be a stock to keep an eye on, as well as, as far as, potentially outperforming, post their earnings announcement. So that's just one way to utilize this table here. Okay. So again, this table builder is very, very helpful. Again, you can save this and, basically go up here to click on Save As, and, always come back to this table just to make sure when companies are reporting, as well as what the general expectation or sentiment is, which is captured very nicely by the Zacks rank. Okay. And the last thing I just wanted to mention with regards to earnings is the weekly sector and market earnings trends report. And this is available as a research report. It's very, very useful. It's great as a conversation builder when you're talking to clients and setting expectations. If your clients are asking about, how, are we doing overall? What's the sentiment like? How is the market, performing? Or how, what's the general expectation on earnings? How are we doing overall? This report right here is a great summary as to how well companies in the S&P are doing with regards to earnings. So you can basically look here and say that, over here, thus far, 193 companies within the S&P have reported Q1 results so far, and total aggregate net income is down 17%. So that's down 17% versus Q1 of last year. So that's actually, although it's really, really bad, but it's, pretty much what we all expected, with the shutdown, as well as supplementary right next to that is a plus 0.6% higher revenue growth over Q1. So that equates to roughly a 64.8% beat rate on earnings and a 60% beat rate on revenues. So that may sound good because that's telling you that 64% of companies are beating the expectation. However, we're going to see in the next couple of charts that that's actually a very low number compared to, where companies have traditionally beat over the past several quarters. Because what tends to happen is, with, the COVID shutdown, analysts have been slashing their estimates, right? So because we're heading into earnings season with extremely lowered expectations, the 64% beat rate isn't, that impressive. And you can see here, if I were to scroll down into some of these charts here, I'm going to go to one in particular that I like to look at. Right here, you can see that, and hopefully you can see that clearly on your screen. Let me try to zoom in a little bit here. Anyway, let me try to see if you can see that here. But over here, this chart shows us that right now, roughly 64.8% of companies, as I just mentioned, are beating the Q1 earnings expectations, right? So that sounds like a good number because it's a majority. However, it's tracking significantly below, previous quarters. The lowest is basically matching where we were in the fourth quarter of 2018. And, it's a similar issue with Q1 revenues. At a 60% beat rate, that's, lower than where we have been before in previous quarters. So, and again, this is based on lowered expectations heading into earnings. So again, it's not a great result. However, what's on the minds of everybody right now is, despite the fact of the shutdown, why is it that the market has been so exceptionally strong, right? We've rallied significantly over, from the bottom. And why is that, right? So the reason for that, and this is just one way to think about it, is this chart right here, where you can see here that the earnings growth, right, the contraction year over year has been significant for Q1, okay? And it's actually projected to get worse in Q2. You can see here that earnings are projected to drop year over year for Q2 by 34%. So it's 15% drop in Q1 over Q1 last year, followed by a 34% drop in Q2, right? So it's getting significantly worse in Q2 because the majority of the shutdown has affected Q2 more than Q1. However, you can see here that Q3 and Q4 are still projected to be pretty bad, but nowhere near as bad as what Q2 is projecting. So analysts are still projecting a significant drop-off in Q3 earnings versus last Q3, as well as a drop in Q4 earnings versus last Q4, but the rate of change is declining, as you can see there. So the rate of change for Q3 is 18.9% drop, and then for Q4 it's a 9.7% drop. So basically what this is telling us is that analysts are expecting a pretty sizable rebound in the second half of 2020. So whether that happens, it's to be continued, it's to be seen, but that's what the expectation currently is. And that's what the market is currently tracking, in addition to the extraordinary stimulus that we've seen from both the Treasury and the Federal Reserve. So the combination of those two, in my opinion, based on the data that I'm seeing, is the reason why we have seen such a ferocious comeback in the stock market. Okay. And this chart right here kind of shows you exactly that, where this is telling us the total S&P annual earnings going back to 2010. You can see the aggregate earnings growth of the S&P 500 for each calendar year. So we saw that it, equated to about 1422, and that's in billions in 2019. In 2020, that forecast has been cut, to 1143. Okay, so that's a sizable drop, the likes of which we haven't seen since the great financial crisis in 2008, 2009. However, if you look at 2021 estimates, it's projected to basically be flat over 2019. And then 2022 is projected to resume that growth that we've been used to seeing in the post-recession period. So again, 2020 is basically looking like it's going to be a write-off, and that's what the market is essentially telegraphing, is that we're basically looking at 2020 as a simple write-off year. Earnings are going to be bad, but as of right now, it's looking like 2021 will be the recovery year, where we get back to where we were in 2019, and then back to growth again in 2022. So that's currently the expectation right now. So again, this is a very fluid situation. We'll see as we go, as we get further guidance from management, as we get further guidance from the federal government, as to when we can start reopening the economy. So that is going to be a to be continued number, but so far, as of right now, this is my personal interpretation as to why the market has rebounded so swiftly. Again, because analysts are expecting a second half recovery in 2020 and basically a break even with regards to total S&P earnings beginning in 2021 versus 2019. So again, it's a 1-year write-off followed by a resumption of growth in S&P earnings. So this report is very, very useful. I love it. It's written by Shiraz Mian. He's the Director of Research here at Zacks. He and our Managing Director, Tim Nyland, have that quarterly call, market strategy call. So he writes this report. It's updated weekly during earnings season, and it's a great resource just to quickly gauge and understand how are we doing overall with regards to earnings and revenues. Those are the two most important metrics that drive stock prices over the long run. So to know what's going on, this report is very vital. I'd highly recommend it. And again, it's right under this market strategy section and the weekly sector and market earnings trends section right there. So again, really useful information. So I hope this was helpful. I do see one question here, and I'm just going to read it out loud. There's a question that says, is there any metrics to watch on Zacks 5 ranked stocks that could indicate a change to Zacks rank number 1? For example, I told a client to sell a stock that was ranked 5, strong sell. The next day, the company had blowout earnings and went up 20%, and the Zacks and the rank changed to 1. So great question. Is there a way to know whether a company will go from 5 to a 1? It's a great question. I would say the best way to think about that is to understand what's driving the underlying component. So if I go back to here, like say for example, AGCO is a number 5. So if we drill into AGCO, right, and if I go to our quant models here, and this is basically a way to just quickly gauge all of our various different alpha models here. We have our Zacks indicator rank, which is our Zacks rank. Right now, as we just saw, it's rated as a strong sell, as well as our growth value momentum scores. And then here are some of the longer term scores, the earnings and dividend quality score, the price response indicator, and the Zacks insider rank. So I would basically think of it in this way. Analysts are very, very, if you look at the individual components, right, we have the agreement, right? To what extent are analysts in agreement with one another? We see that there has been 4 cuts. So it's looking at the number of, increases versus the number of decreases in their F1 estimate. That's their 2020 estimate. And you can see here that analysts are basically cutting their estimates a lot more than they're increasing the estimates. So that weighs to the downside. There's been 4 cuts. And then it looks like the magnitude. So how much has the F1 estimate trended, right? And in this case, it's trended extremely negatively, right? The consensus has moved 51% to the downside, right, over the last 12 weeks. And then we have the upside, where it looks at the most accurate versus the consensus. So this is one specific thing that I might look at and say, okay, this might be a potential opportunity, because what we've done here is, since we have a lot of earnings data, we have really started to be able to identify which analysts have had the best track record versus the consensus, right? So because not all analysts are equal, some are better than others. So this is one component to the Zacks rank that I might, place a specific weight on if it's showing, an exceptionally strong number. So right now, it's telling us that the most accurate analyst is 43% above where the consensus is for F1 for 2020. So that's a pretty sizable difference. So I might look at that and say, okay, even though the aggregate Zacks rank is a 5, the fact that the most accurate analyst is significantly differing from the consensus is a reason for me to take a second look at this. Okay, and then the last component is, what was their last surprise, right? It's taking a look at what was their last reported quarter, and it actually turned out that they beat the estimate last quarter. So they do have an ability to beat. Right, so to me, this looks like, okay, this might be something to take a look at further. Even though it's a Zacks rank of number 5, it's a strong sell. However, the most accurate analyst is significantly disagreeing with the consensus on this one. So I would take a look at this, right? That's one step. And then here are some of the longer term scores too, where we have the earnings quality score, and that's a number 1, and that's excellent. So I would look at this and say, okay, the most accurate, analyst disagrees with the consensus. It has a very favorable earnings quality score, which looks at earnings, not just earnings growth, but it looks at cash flow. It looks at the balance sheet, return on equity. It looks at how good Is the company at allocating capital? And if all of those are checking off, then again, I would, make an exception to the negative Zacks rank in this case. We have a growth score of a B, we have a value score of a B, we have a momentum of a C. So again, these are pretty good numbers overall. It's a pretty good growth score, it's a pretty good value score. Momentum is average. So, I look at this and say, okay, this warrants a further look. So maybe this is not, necessarily a sell, because if you combine it with other metrics here, and if you combine it with this particular line item within the Zacks rank, I would basically take a look at that and say that could be something that we should look into further, and maybe not sell just purely based on the Zacks rank alone. So again, it's great to combine the Zacks rank. It's not a single final recommendation. It's a great aggregate score, but I would really look at the individual components as well. And if something really jumps out at you like this, then it's worth taking a second look at. So great question. And if you have any other questions like that, please feel free to email us at zat@zacks.com. That's zat@zacks.com. I don't see any other questions here, so this will basically end our call today. But again, it was a pleasure hosting this call. Once again, my name is Mayur. Again, any questions or any feedback, or if you have any specific topics that you'd like for me to do next call, please email us again at zat@zacks.com. And looking forward to having this again in the future. All right, thanks everyone. Take care.